We are live. Hi, welcome to Venture with Grace.
Hey, Grace. Thanks so much for having me on.
I was like binging through your past. Oh, by the way, I want to give a quick shout out to Sid from Foundation for the amazing intro. And then, yeah, I'm
Thank you,
so excited.
Sid.
Yes, I'm so excited for the convo. Okay, let me quickly give a quick shout out to our amazing sponsor. So this episode is brought to you by Verivan. If you're a GP or LP looking to simplify capital raising and deployment process, Verivan is here to help. Trusted by over 800 funds and managing more than $2 billion in transactions, Verivan offer a secure, streamlined payment platform designed specifically for private capital markets. Say goodbye to manual reconciliation and repeated follow-ups. Raise and deploy capital faster and with greater transparency. Ready to make your fund operation smoother? Visit Verivan.com or use our bit.ly link down below and see how easy it can be. Okay, so to start with the show, I would love for the audience to get to know you a little bit more. So you have been at Bain Capital Venture for over 13 years before you started your own fund. Why don't we start with what were some core lessons that you learned there that kind of like shape you to who you are today?
Yeah, sure thing. So a couple things stand out for me. So I had an amazing experience at Bain. I joined there in 2012 as an analyst. I thought it would be a 2-year gig, maybe 3 if everything went to plan. And then fast forward, and I ultimately ended up being there about a decade. Got promoted a couple times along the way, left as a partner. Um, but there's a couple things that really stand out to me in terms of my experience and the time I had there. The first is that apprenticeship really matters in venture. In my view, there are multiple ways to succeed, and I was extremely fortunate that I got to spend time with some of the very best in the business who all had specific styles, which they made their own, and I was able to pick and choose from that which areas I liked and which I thought would dovetail well with my style and which maybe I didn't have the skill set to go after. But I got to work with everyone from career Midas list, multiple time honorees, to former public company CEOs, to people who are just extremely skilled operators. And I got to learn a ton just from spending time with them, seeing them practice the craft, and getting to learn from some of the very best. And for me, it was important to figure out from each of those how to then I go forward and hone my own style. One of the other big things I think about is you have to optimize for your network and surround yourself with brilliant people. I think that being at one of these big multi-stage platforms where you truly get to be surrounded by some of the very best in the business, both from the investor standpoint and the founder and operator standpoint, you get calibrated on what exceptional looks like. And that I think is extremely important when you want to go to bat and say, hey, look, these are the traits I see in this founder, and this is why I think that they are exceptional. You have a baseline of other analogs you can point to and say, yeah, these are the people which are top of my thing when I think of that. Um, the last thing I'd say in terms of one of the big experiences I picked up from Bain is figure out what you're going to stand for. So, what are people going to associate with you, turn to you for? What are you going to build unaided recall around? It could be a network, it could be a skill set, it could be specific domain expertise. But think about what is the one area where you can be top of mind for people and they'll seek out your counsel before anyone else does.
For sure. Speaking on top of mind of people, so yesterday when I was like doing all the drafting research, and like I feel like one of the things that you mentioned is like really interesting. It's like you help people in like a conventional way and the unconventional way. Maybe we could dive in a little bit more about like what is the unconventional way for the audience.
Yeah, sure thing. So the conventional way, look, I think there's certain pillars which are going to be helpful to most every founders.
Mhm.
So whether it's the early handful of design partners which help put your company in business and give you that kind of social proof or halo when you're pitching your first couple of enterprises, that's one very obvious thing. We have a deep network of people who work with a bunch of startups and understand what it takes to go from, hey, here's kind of the initial prototype to here's something an enterprise will want to buy. But highly conventional. Another great and easy example is potential candidates. Who are the people in your orbit that you can bring into this company?
Mhm.
The final kind of conventional pillar I think about is fundraising. So how can you help the founder get in front of the right investors for that stage of the company and understand the curation in between the founder and what their needs are and then what the investor might look like, and making sure that they have the right skill set and attributes which are going to be additive to the company. These are all things which lots of firms have exceptional platform teams which are also doing for them, and it's very clear like the deliverables are there. So in terms of the unconventional, I think a lot about the individual relationship that you can build with each founder to figure out how you can motivate them in the right directions. So a lot of the time it's having the authentic relationship with them and understanding what their skill sets are and what their blind spots might be. And I don't think that your job is to provide them with the answers and to solve problems for them. But I think it's to ask the right questions and understand what are the ways in which I can help this individual be the best version of themselves. Or what are the team dynamics at play here where I've seen this movie before and I can help these teams kind of get out of whatever topic that they happen to be in at this moment in time. And a lot of it is frankly just understanding the human dynamics and being empathetic to them and having the context such that you can actually say the things which are going to help the team at that moment in time, which there's no real substitute other than just have to get to know the folks that are involved.
For sure. I wonder, maybe we could start with like a few companies that you have invested in, and then like so the audience could understand like a little bit more about like from the investing side. So I know that your fund is like investing in 25 company per fund, and then maybe we could talk about like obviously you have invested in a lot of in the security space or like infrastructure software space. Maybe if you could dive into like the thesis, and then maybe we could use some of the companies that you have invested in as an example on like how you find the company to how you like diligence them and like eventually winning the deal and then like making the exit.
Sure thing. So I don't want to pick favorite children, so it's easiest for me to go for either recency or markups in terms of things to talk about within the portfolio. So let's go with recency for one. So the most recent company I invested in is a hugely exciting company called Jordy, operating in the cybersecurity space. And the investment thesis that led me to them was everyone's talking about deploying agents, agentic infrastructure, and using AI as a force multiplier for productivity in the workplace. That's great from an organizational perspective in terms of people can get more done. It's also an absolute nightmare from a security perspective.
Mm-hmm.
But if you're a CISO, the last thing you want to do is be the person standing in the way of your organization adopting AI. So how do you balance the components of, hey, we want to be an AI native and AI forward organization and be experimenting with the very best products which are out there, but also understand, hey, what's the risk and posture of our organization? What are these agents doing within our environment? What data do they have access to? Who is responsible for these agents? Are the behaviors that they're performing exactly what we expected? Or are there actually risks here which we didn't know about or the individual end user themselves didn't know about when they spun up an agentic process? So that company is giving CISOs and CIOs a single pane of glass and visibility into who's doing what with AI and agents within their organization. Yeah, this is exactly it. And understanding, okay, from here, what exposure do we have? How do we do this? And how do we still leverage AI, but also do this in a safe manner and in a way where we can report back and say we understand what our risk posture looks like?
I wonder, so like I guess like maybe we could talk about like in the entire security landscape for a little bit. Like what are some like subcategory of things that you personally feel like have like it's like where people are spending most amount of money on? Because like in the AI space, yesterday actually I just got back from the Madrona I-40 summit, and then like I feel like my major takeaway is like in the past people think that they're selling to human, but actually nowadays like a lot of product are selling to agents. So like you don't really have to, like I was writing my big like 3 takeaway posts. One is like you're selling to agents, and then the other one's like you like a lot of the product are like functioning or like used by agents, so you don't really have to design as like you're designing for human, from like the UX UI design to like how the product actually function. And the other part is like um in the future like human is just like a supervisor. So like I guess like how do you think about like from the security landscape, like what is important, what is not, and then where are like the budget actually goes to. Because nowadays, like I think like as a normie in tech, like people only heard about like Wiz or like
Yeah.
something really huge. But like I think from the day-to-day perspective, like what would be your, let's say, three things that you personally feel like would be the most like on top of mind of like all the CISOs and everybody else?
Yeah, I mean, Sid introduced us, and this is why I want to pull him into the conversation and have someone who's truly world class in cybersecurity speak to it. But in terms of the areas I'm spending time in, so look, I think this confluence of AI and security, so like what Jordy's doing, where you can provide security around AI, is top of mind for the CISOs in my network. And if I think about other areas where people are leveraging AI in security processes, kind of two major buckets that I think about. One is using AI to help supplement existing processes. So obviously, there's a lot of attention right now around SOC automation and the usage of AI to automate specific processes within the SOC. The other thing I see a lot of is agents for specific functional roles in security. So the other night here in Boston, we convened what we call the Security Speakeasy Demo Night in conjunction with two companies I'm very fond of. One I'm invested in called Nebulock, which is building an agentic threat hunting platform, and another company called Ntomo, which is more focused on MCP and identity. But within the agentic threat hunting component, which is where Nebulock is focused, they're able to codify right now what is very manual, human-intensive cybersecurity processes around the discipline of threat hunting. And they're able to leverage AI agents to create what is effectively a 24/7, always-on AI hunter, which is looking in your environments and surfacing things which others might have missed. Yeah, this is exactly it. So this company's been absolutely off to the races. I was very fortunate to be part of their first institutional round of financing. That was a little over a year ago now. It was just Damien at the time, the founder, who's based here in Boston. I think the team is now up to 13, 14 people in an absolute rocket ship. And you can see the banner at the top. My good friends and former colleagues at BCV led the most recent seed round in the company. But this is another great example of applying AI agents within security to supplement existing functional roles. And really, it's an area where historically you needed a lot of very expensive, very curated expertise, and this is helping with that. And in a world where Damien wrote a great blog post recently about what Anthropic was able to surface in terms of malicious actors using that general purpose AI platform to do hacking in real time. In a world where those timelines are getting massively compressed and it's down to like a couple hours and people can effectively pull off a hack, having something which is autonomous and can make alerts in real time is extremely powerful.
For sure. So I guess like, so for the, maybe we could talk about like how do they sell to CISOs, or like maybe what is the budget behind like each of these like subdomain?
Yeah. CISOs, in my experience, are extremely reputational buyers, which is distinct from a lot of what's happening within general purpose IT, where, say, for example, if you're a VP of engineering in a company, of course, you want to use a product that you know well and is going to do the job, but maybe you're going to be a little bit more risk on in terms of, hey, if the startup can do this thing much, much better, then I'm willing to take a flyer on it. CISOs, it's a very different calculus. There's so much of, hey, we need to keep this organization safe. There's a reputational component to everything that's being done, and I want to make sure that whatever the best-in-class tools are across the industry, that I'm using a lot of what my peers are. So if you look at how a lot of CISOs go buy things, it's not, hey, go on Twitter or go on Hack and Use and see what's trending. It's not the other end of the spectrum where you pull up the Gartner Magic Quadrant. A lot of it is asking your peers and getting the text thread open and texting kind of the 10 peers who you think most highly of and saying, hey, what are you using to solve this specific problem? And that's how a lot of these decisions happen. And within cybersecurity in particular, that's why you get so many people who will stand up and be lighthouse CISOs for a company and a founder, where it's a lot of a really trust and reputation-based sales process. And having that empathy for what a CISO might be facing at any given point in time and earning the trust to go protect those environments is an extremely crucial part of those early sales motions.
I wonder in terms of like, I guess like from the I guess like from your experience of like the AI aspect. So one part is like obviously you just mentioned like it's like a 24 hours on AI agent that helps you detect all the threats. And like and then the first company was like more towards like monitoring side of
Yeah.
things. like how do you think about, I guess, like beyond like one part is like monitoring or like threat prevention versus like threat, like I guess like fixing the threat, like I guess like how much time or how
Remediation.
much budget do you feel like people are spending on these two different category? And then also like for the AI aspect, like obviously there's like the AI that helps you that to like kind of like help you detect all these different threats. But right now AI is also creating a lot of threats. Like what are some of the, I guess, maybe tools or like trends that you're seeing in the AI security space that's like I guess like no one is talking about?
Yeah, you touch on a really important dynamic here, which is that there's this massive, you can think of it as an arms race or maybe a cat and mouse dynamic, where the malicious actors are leveraging AI extremely effectively. And I think at the end of the day, the things I think about are how do you create trust in a human environment and use that to our advantage? And I think that we're really fortunate. There are a lot of exceptional cybersecurity founders who are putting all their energies and resources behind keeping the world safe and making sure that the good actors also have the same toolkit that the bad actors do. And I think we're extremely fortunate to have that.
For sure. Maybe we could talk about like I guess like when it comes to like some of your other companies are related to like I guess like dev pool, since like I was like looking at a company called uh Zola, like it's like an automatic it's a anonymous or like I mean autonomous quality for like engineering team.
Yeah.
How do you think about like the dev tool space? What are some like I feel like lately when I interact with all the YC founders, like a lot of people are building basically AI engineer for everything. So
Yeah.
like there's QA engineer, there
Yeah.
is on-call engineer, there's like engineering manager that manage other AI agents. So like how do you think about in that space? What are something that's interesting and how do you evaluate on like which company to back or not?
Yeah. Sure thing. So you're exactly right. There's tons of very exciting activity in terms of what's happening within agentic functional roles for technical functions writ large. So Sala, I would class as an agentic QA engineer, and I'll probably get in trouble with Arcadi and Iran for that. But they'll forgive me, I think, for the shout out. If I think through kind of where there's a bunch of interesting opportunity, what I hang my hat on. So another good example within the step function portfolio is a company called Pavo, which is building a full stack agentic machine learning engineer. Um, a lot of what I focused on when I spent time with the team was their unfair advantage and their pedigree in terms of understanding what was going on in the space. Rashad had previously built out a huge amount of Spotify's ML personalization and machine learning infrastructure out of the London office. And so, in terms of the people, yeah, this is exactly it. In terms of the number of people and the unfair advantage that they have in terms of the expertise, every single person who cared about machine learning and data in my network that I put his profile in front of was like, yep, would love to chat with that guy. And they had a very interesting forward deployed motion where they could understand the organizational context and extract that knowledge and do it in a way such that their agentic system could actually work end to end, which in my mind allowed me to build conviction. But as you'd expect of so many of these pre-seed investments, it's entirely human driven. Another good example within kind of the broader AI infrastructure world is a local company here in Boston called Quotient, which is building, it's within the broader AI evals category, but specifically around LLM and tool use observability. When I first met Julia and Freddie, I knew from the outset that they were special. They had built Copilot data inside of GitHub. And so for me, it was very easy to say, look, there's very few kind of applications which have gone fully AI at this point. This was 2023 when I invested. And in terms of this team having a massive unfair advantage of what they've seen at scale of Copilot data and then operationalizing the eval system that GitHub was using internally, for me, it was very easy to build conviction around, hey, this team's special. They have an unfair advantage. They've got a right to win, and they know something that others don't.
I wonder, what do you think about like the team that are like fairly young? So like if they may have work on like, you know, top engineering teams at like these like machine learning engineering teams at like these top companies. Like how do you kind of like evaluate if the problem is big enough, or like I guess like their domain expertise, since I feel like they are technically the expert in this space. Like so I lately saw a lot of like companies that are doing agent testing in the agent like or QA testing or like just in general testing space. Um in a space like this, like what are some ways that you could like diligence the deals to make sure that like they are the best among like other companies that are in the space?
It depends. It's a great question. It depends a lot on the maturity of the business. So typically, where I'm investing, it's first institutional round of financing, pre-seed, whatever jargon you want to use. The maturity range is younger. Like it's often as immature as, hey, we haven't incorporated yet. We have an idea, exceptional set of founders, but it's really just them and their ideas. Maybe there's a PowerPoint in place, maybe there's not. At the other end of the maturity spectrum of where I spend time, maybe there's a product and there's something which people can play with. But it's not, hey, there's several paying customers and repeatable go to market motions or anything like that. So it's very raw when I invest, which I personally love. In terms of diligence, look, if there is a product, you can play around with it. You can get a sense of, hey, like, does this do what it says on the tin? And can I see myself adopting this within a larger enterprise and organization? If you don't have that, then look, this is where the benefit of having a broad and strong network really comes to play, where I do have people I can lean on, both founders who I consider world-class domain experts, but then also expert buyers within my network, where I can say, look, I'm spending time with this team. I love them. I love the narrative. I would love for you to stress test this with me. And you can pretty quickly triangulate on, hey, like, I think this team is world-class, but does the market also think this team is world-class?
For sure. I wonder maybe we could talk about from like the sourcing perspective, since like you mentioned a lot of the people are coming from these like top AI companies or like core team from like these bigger like AI companies. So how do you like proactively sourcing the top talents in the space?
I do a lot of local programming and just try and be a human pinball in the Northeast. So, like I mentioned, we had the security hackathon the other evening. We've done that a couple times now. It's been a huge success. We're doing something similar with AI builders coming up soon as well. But a lot of it is just spending time in the right ecosystems and letting the network pull you into interesting places and just being proactive with that. I think it does also, as you build unaided recall around what you're doing. So for me, it's like working at the earliest stages with technical founders building infrastructure software companies. The universe of people that are doing that with a highly collaborative, super angel type of approach is limited. So therefore, I'm able to build good unaided recall within my network of, hey, this person's selling something. Oh, you should go chat with Will. You should go chat with whomever else. And so that works. That works well. It is massively network driven though. Like I think any half obvious founder who updates their LinkedIn right now to say, hey, starting something new gets a dozen plus cold inbounds from an investor. And it's tough to sift through the noise. So that's where for me, it's really important to have a genuine, authentic connection with either the founder themselves or person 1 degree removed within the network.
For when you're doing these hackathons, I guess like is there any particular theme that you would throw at them? Or like for example, you have an investing thesis in like a particular area and then you kind of like throw the theme to the hackathon? Or like do you feel like it's more towards I guess like a collaborator? Typically people collaborate with each other on like hackathons than just brand just like a one person hackathon, I guess. Like how do you think about like setting up yourself for success to like actually source from the people? Because I think after I was like judging, not like a hackathon, but judging like a demo day, yes, or like judging a pitch demo yesterday. I think a lot of people are just still in the idea phase, and then when I go to the hackathon or interact with people's product, a lot of it's just a feature, not like actual one product. It's unbackable, even for the people who actually win. Um, so how do you think about like judging which team has the potential to like eventually start a business versus like just being a great like hacker or like feature builder or product builder?
There's a bunch of great threads within your question, which we can pull on. So excited to do that. In terms of how I think about kind of the sourcing mechanics, the way I like to frame up my approach is I do come with a prepared mind, and I like to be massively informed in the major areas that I spend time. So AI infrastructure, data infrastructure, cybersecurity, developer tooling. At the same time, I like to be massively founder and people driven. So my point of view is that I try not to be overly thesis driven, but I do tend to be thematic, if that makes sense. Insofar as if I think I'm so smart that I have the thesis of what company should exist, then I should go build it. But the reality is, I'm actually looking to these founders who I consider world class in their disciplines to be the ones to lead me to the water and help me understand, hey, this is where the market's going, and here why this is interesting. Within my own portfolio, it's really easy for me to point to example Electric SQL, where the company is a sync engine. It came out of the local first movement. Local first, for example, was something I'd been familiar with prior to meeting James and Electric, but it took the conversation of him to unlock in my mind, oh, like this is where the world's going, and this is what happens when everyone uses a sync engine. And to help frame that a little bit, sync engines power exceptional user experiences. So they are the architectural underpinnings of exceptional applications like Linear and Figma, for example, leverage these sync engines and local first to a meaningful degree for responsiveness. And there's a bunch of other cool functionality too, which we don't need to get into right now. But the point being that I came at it with a prepared mind, and there was the conversation of James where I was like, oh, like this is where the world's going. And that for me was the big unlock. In terms of understanding the other component, I think your question was, hey, within these teams, how do you discern who might be just a great individual hacker versus how do you think about someone that can really go the distance and build a full product or platform company? There's a little bit of just getting the reps in there where you get a sense of how fulsome is this person's vision, and have they gone through the idea maze sufficiently and thought through like these are all the different paths that we could go run down, and here's what's interesting and here's what's not. I really try and test for customer empathy. So if you look at the archetype of a lot of the founders I work with, it's people who were practitioners in whatever domain they are now building a product for. And they really understand, hey, here are the set of things which are out there. Here are the limitations of them. And here's the thing that needs to exist. And here's how I'm going to go build it. And because I was the user in a different life, I can talk from personal experience about like, hey, like, here are the problems you face. Here's why this is priority number 1 or 2 for you. And here's how we go solve that.
When you are, I guess, like, what are some newest thing that coming out of the hackathon that you have thrown like that you find very interesting? That's maybe like you mentioned, like it's kind of like going contradictory on like maybe your original thesis, or not contradictory, but like I guess like go a few steps beyond the original things that you find interesting.
Oh man, it's a really good question. So the way to think about it in this case would be, hey, like, what is the biggest thing that maybe I've changed my mind about from a product perspective? I think I've been really blown away with how powerful agents have been able to accomplish things in a relatively short amount of time. So in terms of how people can actually use them today and organizational-wide deployments of agentic infrastructure, like I think that is happening right now. But in terms of agents actually being able to really meaningfully give people leverage on that time, it's not a next year thing, it's a today thing.
For sure. I agree with you on that. Why don't we talk about, I guess, like from a fund perspective, like how much time do you spend on like security versus like infra versus like dev tool? And since like you invested 25 company per fund, do you do follow-ons, or how do you think about the whole like portfolio construction? And does each company get like the same check and trying to get the same amount of ownership, or like do you feel like that's like less of an important thing for you to think about?
Yeah, lots of great stuff in there. So to answer the portfolio construction question first, so 25 companies within the portfolio. For me, that's the appropriate blend of being able to be high conviction and high touch with every single founding team that I work with, but it's also large enough to absorb the loss ratios of early stage venture. So that for me, there's a nice blend there where there's a lot of teams I get to work with. And at the same time, like I'm extremely excited, and every single company has been working so far, which is extremely exciting. But at the same time, it is definitely a portfolio approach. In terms of ownership and check size and all those things, so I'm typically investing 250K. That's been what I've done for pretty much every single investment. The strategy does put a premium on upfront investing. So from a pre-seed going into a seed, I'll often do something to show support for the company, but the biggest check is typically the first one. My view is that you build your conviction early and you try and get as much ownership as you can early, and you get rewarded for that. In terms of ownership targets, look, I'm a small collaborative check, so I'm not setting the price on any of these rounds. If I look at the average post-money valuation across the portfolio, I'd say on average, let's say it's like low mid-teens, something like that. I will say it feels over the past year that valuations maybe crept up a little bit. So whereas when I first started the fund, there's typically 250 is part of a $2 to $3 million first round of financing at 10 to 15 post. Right now, I'm saying probably more 3 to 4 at 15 to 20.
How do you think about, I guess, like sourcing in Boston, just because it's such a unique area, as like there's a lot of good like students coming out of like the Harvard and MIT of the world, and how do you think about like sourcing from the geolocation? Is it different from if like you live in other places?
I love being part of the Boston ecosystem. Moved back here about 3 or 4 years ago now, and it's welcoming with open arms. And I think that it is underrated, and there is a massive amount of technical talent here, which I love working with. In terms of the things that make this place special, you absolutely touched on one of them, which is the university ecosystem. So obviously people have heard of MIT and Harvard, but there's a bunch of other highly talented computer science departments around here, which is spinning off interesting people. The MIT and Harvard ecosystems are exceptional, and they're spitting out great people. Nebula, we've already covered, but Damien came out of MIT CCL program, the computer science and AI lab there. If I think about kind of sourcing here versus other places, yes, the university does make a big difference to it, but there's also just a lot of, frankly, great tech companies here. So everything from big public tech companies of, I think the Klaviyo's, Toasts, Wayfairs of the world. You also have kind of the old schools, the Akamai's of the world and the Red Hats of the world, who are still here and have very great and meaningful engineering presence. And then there's a bunch of exciting young startups coming through as well. Obviously, in my world, there's companies like Starburst and Mabel, who are at scale, big kind of data infrastructure or quality businesses. And then there's a bunch of startups, and I'm hoping to get in on the ground floor of all of those coming up. I'd say in terms of like generally the ecosystem here, it's very much a can-do attitude. It's very much substance. There was an amazing conference I was at on Tuesday, organized by Founder Collective in conjunction with a bunch of other people, called Collective Future. And for me, the density of amazing leaders that came together and just willing to push the ecosystem forward really showed me how special a place this is. I think everyone in Boston will say that the ecosystem could improve on self-promotion, or frankly, any kind of promotion. It's very much an ecosystem of substance over style, but I think there are some amazing storytellers coming through here, which are going to put this place on the map even more so than it is already.
For sure. I'm like looking at your Substack. So like one of the articles about like stage sector vision vibes.
Yeah, that's going to be too.
So why don't we talk about like as founders, like if you are raising pre-seed, like I mean a lot of people ask me for like investor introductions, and like what are something that you feel like founders are doing that are like common things that people ask you, but like you feel like it's like a common misunderstanding?
I think there's a few different things. One is time. I think people understand, hey, like I know I'm going to be working with this person for a while, I'm going to be working closely with them. But then when I step back and be like, hey, look, think about the average company life cycle. If you get this right, you're literally going to be working with this person for the next decade, maybe longer, and you're giving them a huge chunk of your company. So is this a person that's going to be able to go the distance with you? Are they going to continue to be able to help you? Or are they someone who kind of is fine for the time being, but they're not going to be able to go the distance? I'd say that's the thing which comes up a lot. And another is just understanding, hey, at the earliest stages, like, does this person have the toolkit to get to a yes/no decision? There's a lot of bigger brand name funds where people are like, oh, this person's reaching out, like I must be so special. And I'm like, yes, like you are special, and it's great that they're showing interest, but at the same time, it's like, the test I mentioned in here is divide the fund size by 50. and that's the check that the firm really wants to write. And that's extremely simplistic. It's speak 25 company portfolio initial check to reserve ratio of 50-50. But it is directionally helpful insofar as, look, like, if it's a multi-billion-dollar fund and they're writing a $2 million check, what type of exit do you need to drive to actually move the needle for them? And so just thinking through kind of alignment and if this person's going to be able to build conviction pre everything, or if they're just building the relationship for down the road, which is great and is fine, but then maybe prioritize that in a different way than you would someone who is a legitimate lead candidate for this round.
Can I ask? So I guess like the other question I had was like, as a I guess pre-seed investor, how do you think about like the follow-on investors or investor intros for your own portfolio companies? And do you make, let's say, 3 really solid intro to like, I'm sure like relevant investor, but or like do you um intro to like 10 investors? Do you feel like it's a kind of like a numbers game for the portfolio company?
It depends. I try and be super deliberate and thoughtful about it when I do make intros, and absolutely, downstream investor intros is a huge part of the value I can provide to founders. I think there's a couple of things I think about. One is just finding someone who is appropriate from a stage and sector perspective.
Mhm.
But then the other is the personal curation of, hey, I know that person's work style, and I could see that complementing yours, or I know the types of investments that that investor tends to get excited about, and here's what you do or do not match to that. And understanding that takes time. You need to work with people across a couple of different companies to have a sense of like, what's that taste? What is the thing which gets them excited? What are the areas which it just might not work?
Mhm.
But I do try and focus very much on quality over quantity. So I have a very broad network. I'm capable of doing a dozen plus interests for each founder, but I try and really focus on like, hey, let's work backwards from who your ideal lead is, and let's put everything we can into making sure that we can convert one of those candidates rather than just being like shotgun approach. We're going to go speak to 100 funds and hope for the best. But the reality is that it is also a little bit of a numbers game to this.
What would be your so the other day like a founder came to me. So I also do like tiny bit of like angel investing, and then like I was a tiny check, not tiny bit, but like I guess like so one of the founders, like she came to me. I feel like her category is not as like sexy as like all the like AI stuff. So it is AI, but it's not like the core function is not AI. So how do you think about like, if you're in a sector that's kind of like overlooked by the general industry, and then but like I kind of like introduced her to company like or like people who are maybe adjacent to whatever she is doing. But I think the major problem is like I think in all the everybody's target list are like all the megaphons plus like the
Yeah.
investors they have met at a conference or like their friends went to school with, or just like kind of like just a bunch of like crapshoot investors. What would be your approach if you have like 1 month you want to raise, let's call it like 3 million for a seed round? Like what would be your approach to make that happen?
Yeah. So this is where I think the curation component is really key. And my general advice would be find your people.
Hmm.
If you look at what's happening, a lot of the big multi-stage firms right now, some of them have a straight up top down mandate to, hey, if this company doesn't have a massively compelling AI story and the numbers aren't the proverbial 1 going to 10, then we're just not interested.
Hmm.
And so I think just don't fight gravity on that one. Like recognize the reality of it and just say, hey, look, like that fund's probably just not going to be a target. But I know plenty of great, super sophisticated, smart investors out there who are like, look, like that is a classic company we're interested in backing. Absolutely. We want to own the right to win those founders. But at the other end, there's plenty of great businesses which are being built, which leverage AI in interesting ways, which maybe have traditional growth perspectives. And we still see an opportunity to make venture style returns on those investments. So I think it's really just understanding kind of who is the person on the other side of the table that you're trying to get in front of, and does this map to an area where they're currently trying to invest or not?
Mm. I find a lot of the business I'm encountering, whether it's like, so some of them are like, the AI native business, or like, two guy lab, huge lab, and then doing something else. And then the rest are like, I guess the traditional industry, and then adding AI to the pitch deck just in case. And I wonder for those folks who are like targeting the traditional industry, and then there is, I feel like some of the people, they like, I mean, I would see them at every event. I'm like super impressed by like the people's like hustle and grind, but sometimes I fear like they may not be like venture backable because it's not like they won't be growing us like the
Yeah.
venture scale like of things. But like, I guess what would be your suggestion for these type of founders to approach investors? Like, should they just seed strap, or like should they just, because a lot of the investor would be, because they're uninterested in investing in these companies, so they be like, yeah, just go seed strap your company. But on the other hand, like for these founders, they are having like major KPIs as like, their last round of investors like forcing them to raise, and then they also feel like they should raise. um,
Yeah.
what would be your suggestion for these people?
I feel a lot of empathy for people in that situation. Look, I think it does come down to the fact that there are investors for that type of product, and it's hard if you're getting existing investors who are putting pressure on you to do something unnatural. But my hope is most professional investors understand what's going on in that type of situation and can be gracious with the founders and extend them patience, particularly if the business is doing well and the KPI suggested it's doing well and inflecting. Then I'd like to think that there'd be some degree of patience afforded. But I think it does come back to, hey, look, like maybe it's not a venture hyperscaler type of investment, but there are plenty of amazing people who are more focused on growth assets. And, there are smaller firms who are focused on the world of growth equity who like these businesses and think about them on a day to day basis.
I wonder when, like, when you were like chatting with your portfolio founders, like, what would be your, like, I guess, like, the, I guess, like, a time schedule as well as like the step to step for them to like fundraise. So for example, let's say like I met you at this hackathon and then you think my product's good, and how should we kind of set up a process of like you kind of like making the decision of investing in me or not, and then when to invest in me, what kind of traction you need to see to feel comfortable, and how do you even evaluate if these like revenue numbers are good or not? Because sometimes like when I look at the YC companies, I'm like, I I have no benchmark to, because your thing is so new. I don't really, I mean, even I talk to founder all day. Like, I mean, I may see one person in the adjacent space, but you're like the only one here. How do I like kind of compare your revenue traction to like the rest of the revenue traction? And then what does it mean you sold like you sold this stuff for like 6K per year? I don't think it's ARR. It's just R. It is revenue. I don't think it's recurring at all. So, how do you think about like the longevity or recurringness of these like revenue benchmark that people are throwing on the deck?
Yeah, you're getting to one of the hot button issues in venture right now, which is how do you think about durable and the persistent nature of what may or may not be ARR, right? Like how much of this is vibe revenue versus like actual durable ARR? I think so where I'm investing, these companies are by and large, if not entirely, pre-revenue. So this isn't something which I think about too much in my day to day, but in terms of when I ask people who are downstream of me how they've been approaching this, and the most thoughtful answer that I've had, one is just frankly old fashioned, going to understand with each customer how they think about the product, how critical they view it. You can look at usage metrics, you can look at deployment within the organization, and that's one good leading indicator. I think people do break out some cohort level analyses and think through retention, both on a dollar and a user basis, to try and proxy on a little bit. I think there's also a very reality of people don't know, and there's kind of two angles to it. There's one, hey, in a world where everything stands still and this product is there, does this end up being an enduring product?
Mhm.
But this world isn't standing still. And so then the other angle is, well, what happens when someone comes out with something which is better? And does that rip people over, or does this already have the distribution such that you think it has escape velocity, even if it's a somewhat high churn business? Thankfully, this isn't an issue that I have to face on the day to day, but my heart definitely goes out to the growth investors out there who do have to think about this regularly.
How do you think about like if ChatGPT is gonna do something similar, or like all these coding tools? Sometimes I feel like tomorrow ChatGPT may just launch a new thing and then it's like scratched, or like cloud. I feel like, so how do you think about like these like different sub-segment like AI engineering tools that are building in the space, that like which one do you feel like would have longevity, or like which sub-segment you feel like are going to be useful for coders versus like not?
Yeah, it's a great question. I mean, the whole kind of what if OpenAI does this to me has shades of you can go all the way back and just say, oh, what if Google does this? Or like in my infrastructure world, there's a running joke about AWS reInvent being the Red Wedding for the Game of Thrones reference among us, where they would announce a bunch of new products and everyone would be like, oh, has this just obviated a category overnight? I think the nuanced take on that is it's a double-edged sword. Like it's a hat tip to the fact that they think that the area is important and they want to put strategic resources behind it and they want to invest in it, which is great. It's validation of the category. The bad box is that now you do have a great head-on competitor which has meaningful distribution and likely already has good account control with the people that you'll be going after from a customer perspective. So I think it really just it puts the onus on the founder to one, be able to talk through, hey, what's the unique component of what this product brings to the table? And what are the things that we can do for you, which the hyperscalers or the major foundation model research labs can't? And I think there is a little bit of the best founders do find a way to think through the chessboard and say, hey, look, like here are the areas which will be strategic to this organization. Here are the areas which won't be. Here's how we position ourselves accordingly. So for example, look, like OpenAI has made it very clear about their ambitions around what happens within code generation right now. At the same time, you've seen a lot of companies be able to hit escape velocity by positioning themselves well and focusing on developer experience. So I think there are opportunities there. You just need to be thoughtful in how you prosecute them.
When I guess like when you're maybe we could talk going back to the fundraising perspective. How do you set up your own CRM on like which intro to make, which intro to not make, or like I guess like do you make them in batch? And if you have to consult like industry expert, for example, like the CISOs or whatever, like how do you make sure that their time is kind of like valued? Do you go in batch? So for example, you list like, oh, here's like 6 of my portfolio company have this problem. Like, let me chat with this guy and then talk about like the things that you are going through. Or how do you think about like, I guess like, do you have like a personal CRM on who to intro in what kind of deals? Or how do you kind of like make it in a more curated and like just like having a structured way to like make this happen?
Curated is exactly right. So I think through kind of the major areas I spend time, so data infra, AI infra, cybersecurity, dev tools, and I think through kind of major buckets around whether it's technical expertise or go-to-market expertise or expert buyers or founders whose opinion I really respect. And I just have it is effectively like a bunch of things stitched together, which do form a form of personal CRM. In terms of gating those introductions, look, I want to give every team that I work with every opportunity to succeed, and that means fully opening my network to them. There is, of course, like a reality around, hey, you can't be asking the same individual for a favor every single day. So I do try and be thoughtful around sequencing, hey, is this a good time for this person to be engaging with any company, let alone my company? And if it is, why do I think that this introduction makes so much sense for them? It can actually be beneficial to them beyond them just doing a favor for me. And then, look, I'm lucky. I occasionally do have people that are just willing to do favors for me. And I hope it comes around and I hope I can repay that favor. But sometimes we are lucky that we are in an industry where everyone does have a pay it forward mentality.
Do you use any AI tool for like checking if certain investor is up for a certain type of companies? Or I guess like another question I had was like because of like founders go through this every day, like if they have to find you, they want to find other investor who are in their like sub category or like in their niche, like how do you suggest them to like find them? I typically send them to like NFX or something, but I think like a lot of the founders are, even the very seasoned founder, or like the founders who have been building the product all the time, like they may not really know um, a lot of VC firms that are in the space unless they're like professionally networking to it. So how should they even find the right person for them at the right stage, the right track size, and then should they find lead investor first and then get the round set up, or like should they just take whatever track that just come to them? And then when the founders are saying like let the market decide, like what's your reaction on the valuation?
Yeah, great question. So in terms of thinking through the right investors to go after, this is a huge thing that I always try and help founders with. And I think my advice to every founder would be lean onto your investors to the extent you can here. So I do keep a personal spreadsheet, CRM, however you want to think of it, of, hey, who are the people and firms that I really like for specific stages of the company, whether it's pre-seed, seed, early, later stage and growth. And I do try and be very deliberate around like not just at a firm level, but an individual level. Like here is that individual's taste. These are the types of founders they tend to work well with. And then I use that to inform kind of, hey, here are the intros I would like to make to you as you think about fundraising. And I think a lot of great early stage investors do something similar and are highly deliberate with how they go after getting their founders in front of the right people. Mm-hmm. And then in terms of the round dynamic, so I think it's fine to say kind of, hey, we're going to let the market decide. The reality is there are a bunch of great benchmarks out there now. So Carter does an excellent job, and I'm sure there are a bunch of other sources saying, hey, here's what's happening in the market right now. You can filter by sector, by geography, by stage, median, mean round sizes, dilution. And at the end of the day, it's a fairly efficient market. And founders often have options as to what they want to think about. So the bigger thing I'd say from a founder perspective is be very thoughtful around like what is the type of round you are trying to raise and how much money does that look like? Like the way I like to approach every single round is it's a time box opportunity to conduct a finite number of experiments. And the question that I always give founders is when you look back at kind of whatever the next stage of the company is, what are the key hypotheses that you wanted to test with this capital? And how do you quantifiably think about success or failure across each of those dimensions? And you want to have a very deliberate answer about like why the money you're raising is going to allow you to tease out each of those hypotheses. Mm-hmm. And then the last question around lead versus follow. It depends. Generally, I think, look, like focus the vast majority of your time, efforts, and resources on the lead investor because they're going to speak for, let's say, 75, 80% of the round. In terms of having, though, like super high value follow signals, I think that can be extremely powerful. So if you have someone who's an industry expert in whatever space you're in, and they're going to put their hand up and say, hey, look, like I want to commit, and price insensitive is the wrong way to think about it, but like within a certain band, like I'm in. Like, absolutely, like have that person on board, have them be an advocate, like go generate that social proof. But there's also like a lot of funds who will waste your time and just be like, hey, like we're a follow check, like, we're not gonna give you a yes, no until we know exactly what the lead is. And there's some degree of like reality around that. And they want to understand like what's the price, what's the governance, who's the person that's ultimately going to be leading this investment. But just stage that accordingly, like keep those people warm, but then like don't give them the same degree of time and energy and resources that you would a lead investor.
For sure. Do you think the founder should have like just like batch through like 3 weeks of like 40 meeting a week, just like pitching the same thing? Or like, do you feel like they should build and then pitch and then build and pitch?
I think each founder, and this is part of where like crafting an investor syndicate that can help you is really important. Like founders are people, and people are not homogenous entities. And so every founder's got their own style. Like take two very extreme types of persona. Like I know some founders who are great at playing the scarcity game, really hard to get in front of. Everyone wants to know what's happening with the business. There's a little bit of buzz around it. And hey, we're only going to speak to like 3 or 4 firms. And for some founders, that works great. And then there's the other end of the spectrum of like, No, we're just happy to chat with anyone, like fundraise or not. Like we just want to have good networks and relationships, and if you reach out, we'll set aside 15, 20 minutes to get to know you. It's a different approach. So in terms of like how to go about it, like I think that there is a little bit of think of doing waves, think of iterating on what worked and what didn't in between each wave. Be deliberate about like who are the people that you put into each wave. Before you go through any fundraise process, I do encourage founders, hey, like find a couple friendlies who are not going to be a fit. Like they don't do the sector or they don't do the stage or just like they're not a fit for whatever reason, and iron out the kinks of the fundraise with them and get a sense of like what the questions will be. And your existing investors should also be able to be a sounding board for that. But then, yeah, in terms of kind of what's the right number, is it 10? Is it 100? I don't know. Like, it doesn't matter if it gets you to multiple options and it's options you like.
For sure. How would you think about like the timing wise? Would it be like 6 months or like would it be like 1 month? What's realistic? And I think a lot of the people who trying to consult me and then I think they have no idea on like it's their first time like fundraising, maybe their product's great, or like they have never thought about like raising venture capital until like recently. And then their question was always like, how long does it take? And then like, when should I move forward or not? Um, and I think a lot of people just also, yeah, I think like the length, it's also like, if people say, hey, like we want to see more traction, do they really want to see more traction, or is just like BS basically?
Ooh, so two things in there. So one is fundraise timeline, and two is how can you tell if like someone's genuinely interested. So the fundraise timeline, look, how long is a piece of string? I've seen everything from like really great preemptive processes that have only taken like a week or two, everything through to kind of, hey, I was chatting with one founder who I'm fond of, but I'm not invested in recently, who for them, it's been like a 6 month process to, get from first meeting to now they've got multiple options and they're happy.
Mhm.
It depends, and it's really easy to focus on the headlines where it's like, oh, such and such, like, we're not looking for money, and all these investors are pounding down our door and unsolicited term sheets. And sure, that's sensational, it grabs the headlines. It's not the reality of what the vast majority of businesses have right now.
Mhm.
So I would say, look, like for a early stage, pre-seed, seed, Series A business, I would think about kind of the right time frame being somewhere around like several weeks to a couple months, not longer than that. And it depends on the business and the fundraise process. I would say one of the things which can be really powerful, and a lot of founders get right in fundraising, is just making sure that they're keeping everyone on a similar-ish cadence and
Mhm.
not letting anyone get like too far behind or too far ahead in the fundraising process, and just making sure that they're equipping investors with like, hey, like here's where we're at, like what can I do to help advance you to the next stage? Because others are getting that, like how do I get you to get to that point? And I think there are some people for whom that muscle just comes very naturally to them.
Mm.
In terms of the interest in, hey, it's just too early, like I think this comes back to like what I was saying in the S2V2 article of there are some people for whom you're just not going to be a fit. Like
Mhm.
they just want to see something which you're not. Like they want to see multiple millions in recurring revenue and analyze go-to-market efficiency. And
Mhm.
you're a pre-stage or a seed stage company with two customers, and like you're just not what they're looking for, and that's okay. Just fill that out and don't think about it.
Mhm.
In terms of the reasons why people pass, or yeah, like some people might say it's just too early and not really give something more substantive. You can push on that, but sometimes they just might not give you the answer anyway. I think more broadly, like you can tell when someone's giving you buying signals. They're following up, they have more questions, like they want to introduce you to people. And if you feel like you're consistently having to prod them to get them to the next step, like they're either distracted, which may well be the case, everyone's super busy and got a million things going on, or it might just be that they're unlikely to be a candidate, and that's okay. Just focus on the people that are leaning in and feel like your people.
Mm. For sure. I want to be mindful of the time. Maybe we could do like a quick 1 minute fire run.
Yeah.
To wrap. Okay. What's your favorite book?
Oh gosh. Favorite book? That's really high praise. That really puts me on the spot. Work or personal or anything? Or
Anything.
um, I don't know about like favorites too hard for me. I hate picking favorites, but a book that I really like and keep coming back to. N.K. Jemisin has a great world-building fantasy trilogy around the Broken Earth, which I think is absolutely worth checking out.
Wow. Who made the biggest impact in your career?
Mm. I don't know if there's any singular person I'm gonna be ready to shout out on that one. I've been really fortunate. I've had a lot of great mentors, and I think of like my personal advisory network around peers, more experienced, less experienced, and people in different spheres who've had a meaningful impact on me in my life and my career. But it feels reductive to pick one person.
Mm. Who would you invite to your dinner party?
Mm. These are much harder than I was expecting. I'll have to come back to that one. I can drop it in the comments
Oh
afterwards.
my God. Where can we find you outside of work?
Outside of work, I have a young family, so I'm most likely going to be at the playground with my kids if I'm not working, or you might find me in the gym.
Love that. Well, thank you so much for coming on the show today. It was such a fun conversation.
Thanks so much, Grace. Really enjoyed it. Thank you so much for having me on.
Let me quickly end stream.